Good afternoon, ladies and gentlemen, and thank you for joining the Q3 2023 Market Insights from CBRE Cambodia. My name is Lawrence Lennon, and I'm extremely happy to introduce my colleagues. I've got Kinkesa Kim, our Deputy Managing Director on the line, Shivali Chaman from our Property Management team, Daluch from our Valuation team, and Sovanpech from our Residential Sales and Leasing team. It's great to have you on the panel with me, and it's great to have everybody in the audience today. So thank you so much for joining. We appreciate your attention and time. And without further ado, we will kick things off. One second, sorry, I'm just getting the clicker. So today we will go over a brief overview of the macro economy, followed by the office and retail, which will be done by my colleague Kinkesa Kim. This will be followed by the residential segment, encompassing the condo, service apartment, and landed property segments from my colleague Kinkesa Kim. We will be following that with a Q&A session, and we look forward to any questions you send in during the discussions. Please feel free to send it in the Q&A section of Zoom. We are looking forward to anything you have to ask, anything you have to say. Interaction is good, so please do get involved. Next slide, please. So today, before we kick things off, I think really just to set the tone, we've emphasized over the past few quarters what really matters. It's an understanding that the game has changed. Cambodian real estate is not the same as it was in 2019. So just keep that in mind, okay? So as we go through the presentation today, understand that the dimensions and dynamics of the Phnom Penh real estate market are not the same as they were in 2019. We would like to emphasize to every single developer that what you need to know, what you need to understand is 3 letters, KYC. Know your customer. Who is your customer? Where does the demand come from? And when you fundamentally understand this, your life will be a lot easier. Our life will be a lot easier as well. So understand where the demand lies. And we believe that once you understand this dynamic, the market will slowly move in the right direction. Next slide, please. So we would not be doing our job if we were not holding ourselves accountable. So we decided to begin with in the Q3 market review to give a brief overview of where we stand with our fearless forecast. We're looking at the end of Q3 today, and we're looking back and trying to work out where we stand. So the reality is there were a number of things that we forecast at the beginning of the year, and we believe if we are being honest or we're being straightforward, it's a value to look at these trends, look at these forecasts that we presented, and see where we stand today. So if we look at the overall situation, cash is still king, and that's for sure the case. So we definitely got that one right. We predicted some distress, we predicted some challenges, and without doubt, that is also holding out true. We forecasted that the condominium secondary market would remain slow. We've given ourselves a 50-50 rating on this one. The reality is that things are extremely slow. That is definitely the case, but the reality is that we're seeing some deals taking place on the secondary space of the condo market. And the reality is that things are slowly moving in that space, though it, of course, like with all real estate, it all depends on the fundamentals of that project. What's the location? What's the price point? Who is a developer? Repositioning is key. Without doubt, that is a fundamental trend within the market. We're looking at a large amount of supply that's come online over the past few years. We've seen doubling, if not tripling, of supply in a range of the key segments. So repositioning, without doubt, will remain a critical portion of the real estate developer's toolkit. So if you're a developer right now, we emphasize that you should be thinking about what multiple purposes exist with your project. The next item that we looked at was client care. This, it seems like a very straightforward item, but the reality is that it's far more complicated than what appears on the surface. When we talk about client care, it means retaining the business that you have. So anybody that is a developer, whether you're a condo developer, whether you're a service apartment developer, whether you're a retail developer, whether you're an office developer, client care is key. So as predicted at the beginning of the year, we emphasize that you should be looking after every single customer that you have. So without doubt, that remains a major theme in our outlook, and it's likely that, of course, this is a standard and basic, but we emphasize over-communicating and really, really looking after any potential customers that you maintain within your project, because it is an extremely competitive market out there. So look after the business that you have. The next item that we predicted in the fearless forecast was marketing is critical. So this is making sure that you're talking with all of the right people, whether it is your competitors, whether it is the agencies. The reality is that as CBRE, particularly on the property management front, we like to work with everybody in the market. So if you have potential customers, we want to work with you. But the reality is, if you're a developer, you need to be working with everybody possibly and making sure that you are marketing your project to the maximum: social media, websites, etc., etc. So this is a critical point, and for sure, it still remains important. The COVID lag. So again, this is definitely something that is remaining. If you joined us for earlier quarterly market updates, you will have heard us talk about the fact that we were of the opinion we were in the eye of the storm. Today, we still feel exactly the same way, though we are now in the depths of that storm. COVID being the storm, pre-COVID or post-COVID, I should say, after the storm, we have entered the end side of that storm, and the reality is it's very challenging, and we were very much on point with that prediction. The next prediction that we had was China will be back. Unfortunately, on this one, we were wrong. Looking at the travel statistics in terms of inbound flights, the Chinese still make up 10% of travelers versus a 40% in 2019. This is something we'll dive into a little bit later on in the presentation, but unfortunately, we are a little bit ashamed to say we were wrong on that one. International conflict was the next one. And when we say that, we are, of course, referring to the Russia and Ukraine conflict and the knock-on effects that has. But we're looking at a little bit of the bigger picture. We're looking at the broader conflicts unfolding globally. And the reality is that we are certainly at the center of the tug of war, as it were. So very relevant and very important for the overall context. Commercial challenges. Yeah, I think if you are a retail developer or if you are an office developer, you're having some challenges right now, and that is absolutely no doubt and no surprise to many of you in the audience. Our recommendation is, we've already listed it down, but client care is key, marketing is key. Price point is the determiner. So you've got to make sure that you're understanding what your competitors are doing and respond accordingly, and understand what the value proposition is. What does your customer want? Are they looking for something different? Think about it, understand it, and please make sure you are acting on it. Cost increases. We've seen some stabilization in the overall situation globally and also domestically. So inflation has eased, things have stabilized. So we're looking at a higher base of cost, particularly around things like construction, interest rates. But we're starting to see some stabilization, which is definitely positive. Cap rate reset. So that was another one that we discussed. When we're seeing all of these challenges unfold, without doubt, as supply increases and rental rates and sales rates drop, without doubt, we're going to see a pass-on effect when it comes to the cap rates. So we were on point, and no surprise there. We are not surprised to see cap rates changing and shifting depending on the sector. The next item was climate change, and Climate change, ESG, they sort of fall into the same sort of category. When it comes to ESG, we're increasingly seeing requests from our international clients. They are asking for support. They're asking for specific requirements from buildings to be ESG certified. On the flip side, I'm sure many of you are seeing these headlines around El Nino. I'm sure many of you are seeing headlines around floods, et cetera, et cetera. So this is likely going to continue to be a challenging item for any real estate player in Cambodia. If you see other contexts globally, whether we're looking at Florida or whether we're looking at the Netherlands, the reality is these sorts of things are really important, and it's likely going to become increasingly important in the short to midterm. So if you're working in the real estate sector, if you're on a potential floodplain, if you're on the coast, you've got to be thinking about these items and planning ahead accordingly. So that was a recap on our fearless forecast. And as you can see, I like to think that we were somewhat on point, and I would say we're probably pretty on point, but we like to, as I say, hold ourselves accountable. So that was the overview of our fearless forecast. Oh, sorry, just flicking around a little bit. Sorry. Just to kick things off into our Q3 market review, you can see a number of the key indicators are in flux to some extent, but a good amount are also stabilizing. So we're looking at GDP growth from most of the IFIs, World Bank, ADB, etc. We're looking at a pretty healthy growth rate, approximately 5 to 5.5% GDP estimation for 2023. We are one of the fastest growing nations on the planet. And again, that really emphasizes why you may want to be doing business in Cambodia, because there's a lot to do and there's a lot of growth to take advantage of. So the reality is it still remains, particularly if you're looking on the longer or midterm, a very, very interesting place to be doing business. We saw some rising, in particular in the office occupancy, both for centrally owned and strata titles. That's on the back of a slowdown on supply coming online. So we are very happy to see that, because we want to see we want to see a healthy office market without doubt. So that is very positive. On the flip side, we've seen some stabilization, particularly around something like the office rental rates. Again, it comes down to, number one, a supply control, but number two, the grade A offices really holding their ground and saying, this is it, guys. We want to stay where we stand in terms of rental rates. So I would expect the grade A offices to hold their ground, but the reality is it's going to remain a very, very competitive market. And the reality is we're going to see a lot of the grade A and grade B offices competing extremely aggressively, whether it comes down to the way in which they look after their tenants, whether it comes down to making sure that they have the right facilities, and equally, it's any potential future offices coming online and matching that KYC that I mentioned earlier, know your customer. So if a new building comes online, it's likely they're going to be potentially LEED certified or any of the other ESG or green certifications. So as I mentioned, these things are going to become increasingly important, and it's possible that we're going to see a bit of a green premium coming online. Giving an overview of the macro side of things, things are not dissimilar from our previous market updates. China is having a lot of problems, and this, for anybody in Cambodia, is extremely important due to the strong relationship that we have with China and the overall market. If China is having problems, of course, it represents a challenge to things like FDI. In 2022, we saw Chinese FDI looking at around 52%. The Chinese real estate market is having a lot of challenges, without doubt. It represents around 30% of their GDP. So keep that in mind. That is going to create some challenges. Equally, the West is facing some problems, whether it's the US, UK, or Europe. That is definitely something that we need to be bearing in mind. Why that's important is because it impacts our exports, which is something I'll dive into in a few moments. So just keep those items in mind. So on the flip side, when either China or the West is struggling, it also impacts things like our tourism market. So if Westerners, if the Chinese and other key potential tourists are having challenges when it comes to their pocket, they're not necessarily going to go on holiday, and they're not necessarily going to spend as much. So these, of course, create problems. When we're looking more domestically, the biggest news of the quarter is, of course, the new appointment of Hun Manet as the Prime Minister of the country, which again creates a good amount of positivity. We're extremely excited to see how things unfold. We're seeing some very positive headlines, and we see a good amount of dynamism and the desire to solve problems and create growth and continue growth for the Cambodian context. So the reality is we're excited for the short to midterm, and we are looking forward to seeing how things unfold over the coming months and years. When we're looking at Cambodia in terms of GDP growth, we're positioned as the second highest grower in terms of GDP growth for Southeast Asia from 2023 until 2025. Pre-pandemic, we were looking around an average of 7% year-on-year GDP growth. We're looking at around 6% moving forward. That's pretty good going on in terms of the global context, and Vietnam is the only context which seems to be surpassing us. That's very much down to the diversification of their economy, as well as their attractiveness when it comes to tourism. But the reality is that we can compete, and it's likely that we will push things forward, and we will capture some of that business. When I'm talking with clients, when I'm talking with anybody in terms of stakeholders here in Cambodia, what I'm stressing is how can we complement our neighbors? How do we tie into their supply chains? How do we tie into the overall tourism activity in the region? Without doubt, that's creating a lot of opportunities, and it's going to create a good amount of positive business activity. The key is how do we interlink and how do we complement? A proven investment is moving in the right direction. We've seen a good amount of growth, particularly in terms of manufacturing and also real estate approved investment into construction. You can see here that the overall number of projects has shifted down, but the overall value has gone up. That's the sort of thing that we're looking for. We're looking for quality over quantity. So overall, things are just about moving in the right direction. Without doubt, we have a good amount of challenges, a good amount of headwinds, but we are quite confident that things are moving in the right direction, all things considered. Next slide, please. Importantly for Cambodia is, of course, the US export market. So when we're looking at the US retailer inventories, we're seeing some decrease in the overall position of inventories. Why this is important is because exports, of course, make up a significant proportion of Cambodia's export market. As I mentioned earlier in this discussion, the West, aka the US, UK, and Europe, makes up around 60+% of exports from Cambodia. We have seen in the short term, since around, let's say, Q2 of this year, a slowdown in overall exports to the West. This is very much on the back of two factors. Number one, a lot of large-scale retailers, such as the Walmarts of the world, were facing an oversupply in terms of their inventories. On the flip side, we've seen Western pockets hit on the back of the pandemic. We can see from this situation that the inventories that these companies have is on the downturn. That is positive, and that means that we're likely to see exports starting to have some form of uptick in around H1 of next year. Q2 of this year, we saw a dip of around 30% in terms of garment exports. This is a critical employer, and this is a critical part of the economy. So the reality is that as those inventories start to dip in the US, we're likely to see a growth in our overall exports, which is critical for foreign currency entering our market. Next slide, please. Tourism is another critical pillar. It's definitely not where we need it to be. And like I said in our previous market update, most of the GMs I'm speaking with are not very happy on the overall state of affairs. When we are looking at inbound flights, we're still significantly lower than we were in 2019, particularly in terms of Siem Reap. When we're looking at tourism coming into Cambodia, most of the tourists, 50+%, is either coming from Thailand or Vietnam. The reality is we're still waiting to see an uptick in higher spending tourists, which we'll see on the next slide. You'll see that the reality is that the spend has dropped significantly. And as I said, when I'm going for meetings with any of the people involved in hospitality, they're having a lot of challenges. So keep an eye on this space. The reality is that time is our friend. Be patient, and things will correct. Things will go in the right direction eventually, but these things take time. Next slide, please. For anybody involved in real estate, tax is, of course, critical. We've seen a number of updates in recent times around exemption on interest and penalties for annual property tax and unused tax. This is interesting, and it's a pretty strong indicator that the government is looking for additional revenue, additional tax revenue. So this is interesting, and while it's relatively small in terms of the government's annual revenues, as it were, of course, it will be important for anybody holding significant land holdings. Equally, there's a good amount of uncertainty when it comes to things like capital gains tax. We're seeing mixed messages. The reality is that we don't have a clear message on whether the capital gains tax is happening or not next year. So that is definitely something to keep an eye on. And of course, it's critical for anybody involved in the real estate market. One of the most interesting, one of the most positive areas of development within Cambodia is infrastructure. As I stress every time I'm doing one of these market updates, I've never seen anything quite like it, whether it's the development of new airports, new ports, new road infrastructure. We're seeing a huge amount of activity. Out of the items listed on this infrastructure in terms of ongoing, the Kopik Gonoria Bridge is probably the item which is closest to coming to completion. This is exciting for anybody who's been commuting from the south of Phnom Penh. This is exciting for anybody who is developing projects to the south of Phnom Penh, whether it's on Gonoria or further south, because it just opens things up and adds a great deal of value to the properties around there. So we're seeing a lot of activity, and we're extremely positive and excited around this subject. That said, officially speaking, we're looking at around $30 billion worth of infrastructure development by 2030. That is major, and the reality is it's going to create a huge amount of value, whether it comes down to trade facilitation for industrial and manufacturing activity, of course, plus logistics, or whether you're developing hospitality or residential property. So we're very positive on the overall development of infrastructure, and the reality is things are very much going in the right direction. So without further ado, I will hand things over to my colleague Daluch to give an overview of the key commercial segments of Phnom Penh's real estate market. Thank you very much, Daluch.
Okay, thank you, Lawrence. Let's now dive into the details of our latest figures for the commercial sector, starting with the office market. So this is the first quarter in 7 years that we have not seen any new activities in terms of launch or completion of new office buildings in a period of 3 months. So actually trace back, and it was since 2016, 2017 that there was no new office completion or launching activities in a quarter. And this is actually a positive sign, because with the slowdown in new supply, we saw an uptick in the overall occupancy rate for the office market from 58% overall in the entire CT in the last quarter to right now averaging at 64% as of the end of Q3 2023. That includes centrally owned buildings and strata title buildings. The major increase is actually surprisingly due to the increase in occupancy rate for strata title office buildings. That is because more strata title office buildings, landlords understand the state of the market and have been very flexible in terms of their rental fees and leasing terms and conditions for their tenants in order to survive, basically. So this increase is a positive sign. And in terms of the total numbers of supply, as of now, we're just right below 1 million square meters of net leasable area. And by the end of the year, we'll be expecting a couple more office buildings to be completed, and the total supply by the end of the year will reach 1 million net leasable area. In terms of rents, we see a generally stabilized rental rate compared to the previous quarter for centrally owned buildings within the central business districts. It's been stabilized for grade A, B, and C in terms of quoting rents. However, for non-centralized districts, non-central locations, both grade B and grade C continue to see a slight downward adjustment between 1 to 5%. This quarter, we would like to highlight something interesting from the business point of view, the office occupiers point of view. So we're highlighting the couple of surveys answers from Eurocham's business confidence survey that has been recently released, and it's directly relevant to the office market for this quarter. One of the question asked is to understand the respondents or the businesses investment plan for the next 12 months. So comparing their responses from this year, 2023, compared to 2021, there's an increase in positivity. So more companies, more businesses are saying yes to having future investment plans and yes to expansion of activities. In fact, more than 60% of the respondents state that they have plans for expansion of business activities in the next 12 months. And this will into the positive trends for the office market, hopefully in the next 12 months. Another area that we also would like to highlight from this survey is the businesses' involvement in ESG and CSR activities, and overwhelmingly majority of the respondents state that they have a strong understanding of ESG and CSR activities and how these are benefiting their businesses, and they need to be operating on a socially responsible way, and almost 50% are actually already implementing such programs, and almost 30 to 40% are planning to do so. So this is a positive answers, a positive trend, and we actually expect that with this new awareness, this new trend, office landlords, the office building developers will need to incorporate ESG elements into their new buildings in order to stand out from the competitors. We'd like to sum up the office market updates with 3 key trends. Flight to quality still continues. This is actually something that we have seen over the past at least 3 to 4 years, as we have more better, higher quality office buildings into the completion into the market, and this is still a very significant trend in the office market in the last quarter of 2023, and with rents being more affordable, we see office occupiers moving from older office buildings or lower grade office buildings to newer and higher grade buildings that have better facilities, better common areas, better security, and those that have more modern features. We also see a similar trend in which office occupiers move out from informal office spaces, such as shop houses, flats, moving into formal office spaces. Similarly, in order to have better amenities, and especially more importantly, in order to benefit from professional property management. With formal office buildings, they don't need to care about cleaning their office spaces. They don't need to care about having a separate security system for their office. So it's all managed by the professional property management team of the office building. Another positive trend that we are seeing in the office market in the last quarter is there is increasing requirements from office occupiers to have health, safety, and environmental requirements, and this is for both international and local occupiers. So more businesses, more companies understand the need of having proper fire safety system in their office, of having set numbers of exit staircases, number of lifts, so on and so forth in their office buildings before moving out. Before moving in, previously they only care about rent and location, but now there are more requirements that they are looking at. And for international tenants, ESG is a primary concern. If the building does not have ESG features that meet the regional requirements, then it's not even going to be part of the consideration. And we think that these kind of ESG requirements will continue to increase, linking back to the survey from the surveys from Eurocham earlier. Moving on to the retail sectors. Similarly, we saw no new launches and completion of retail properties in the last quarter. And the last time this happened was 5 to 6 years ago in 2017, 2018. So this is a positive sign for the market to cool down and allow the demand to take up the existing available supply. However, different from the office sector, the overall occupancy rate for retail market actually continue to see a slight drop down from around 69% to 68% in this quarter. And in terms of supply, it's around 650,000 square meters of net leasable spaces in the entire city, and we actually expected to see more delays in construction project. At the beginning of the year, we're expecting around 100,000 square meters of net leasable area to be completed throughout 2023. Right now, only about half is actually being completed. So this slowdown is a result of the slower the lower disposable income that we're seeing from consumers. In terms of rent, worth noting that this is the average quoting rent. Overall, it's been stable, largely stable, except for community mall, which we saw a slight drop by around 1% Q on Q. However, if we look at the trend year on year, the discount is larger of all retail types except for the prime high streets, which we have mentioned the previous quarter as well. This is due to the higher better prominence and better accessibility for delivery services. We also check brand movements, whether this is new entries of new brands or branch expansions, or even closure or brand exiting the market, the Phnom Penh market. So we have about 30 branch expansions and 16 new brand entries this quarter. Most of these expansion and new entries are leading by the F&B sectors. As usual, this is a reflection of the low disposable income of people in the city in Phnom Penh. And for this time, it's mostly led by local brands only. We only see very few international brands expanding and entering the market in the last 3 months. On the other note, the number of branch closures also increased in the last 3 to 6 months compared to the end of 2022. So this is another sign of retailers still having difficulties in this current time. So to sum up the key trends that we have witnessed in the last 3 months for the retail retail sector, is that landlords of retail projects are still very active, very busy in initiating and hosting many marketing activities at their retail projects. And this is again to try to attract footfalls into their properties, considering the number of new retail projects coming up online in 2023, and we're seeing these marketing activities being more and more creative. It's not just a weekend sales event or and seasonal sales event, but we see activities like concerts, pet days, art days. So trying to attract different kind of crowds and keep things interesting and lively at their retail properties. Despite that, we also see a slowdown in brand expansion, as we have seen earlier in the stats in the last couple of slides. And this could be a result of having no new retail projects opening in this quarter, and hence a slowdown in brand expansions. However, if we look at the number of branch closures, it has been quite a high number in the last 6 months. So this could be a result of potentially lower sales revenue and difficulties in reaching the sales target, and hence the closures of brands. Similarly, this is also another symptoms of the difficulties we're seeing in the retail market, is that new retail projects that are ongoing construction face further delays. Like we have mentioned earlier, about 50% of the retail projects that we expect to see finishing this year are being delayed into 2024. So that's all for the commercial markets. I will forward it to Bongisa to cover the residential markets.
Thank you, Daluch. Very comprehensive coverage of commercial market. Just before I begin, I would like to remind our audience that you have any question, please feel free to drop in our Q&A box. I have seen some question kicking in already, but just a reminder that after my presentation, we'll have a panel discussion with our head of different departments and to cover on your questions. So without any further ado, I'd like to kickstart the presentations on the residential market. On the residential aspects, today I will be covering up to 3 subsectors inside residential. First of all, we'll start with condominium market, followed by service apartment and landed property. In the condominium aspects, next slide please. We saw 1 new launch and 1 new completion within the third quarter of 2023. Presenting here are the phases of those projects. We have seen Times Square 6, a new launch, positioning in mid-range category inside Bang King Kong district, just newly launched very recently, and the completions of Prince Honyu Center, another centrally located project within Chaman district. It is worth noting that this 1 new launch in Q3 is a sign of continuous slow in terms of launches. Just to put things into context, since the beginning of 2023, we have seen only 4 new launches, including Times Square 6 that we're presenting here. In relative term, this is a major slowdown in past a few years when the market was extremely busy during 2018 and 2020 to 21. We saw up to 20 project launches each year on average. In some years, hit up to 30 plus projects. So this is a major slowdown in launching activity, which probably not necessarily a bad sign for the condominium market following a few years of hot activity. Actually, the slowing launches could be potentially more healthy for this market. Beside the launches, next slide please. We also see that completion is going on track. So at least on the construction aspects of condominium, markets are moving in a healthy direction. Up to Q3, since the beginning of 2023 up to Q3, we saw up to 8,000, nearly 8,000 units completed. We're still expecting another 2,000 to be completed in the remaining quarter, and we're very likely that these projects will complete on time mostly in Phnom Penh. And at the end of the year, we are expecting the total supply to hit close to 60,000 units in total. With the new launches and completions slowing down, we see that the proportions of grading or positioning of condominium market are relatively stable. As we can see here, the market is dominant by mid-range supply, followed by affordable and the high-end at last. Next slide, please. On the pricing aspects, we see that price continue to stabilize after following several years of correction. We understand that this has been extremely painful for a lot of developer. However, the signs of stabilizing, at least on the quoting sale price, is a healthy corrections for the condominium market. As you can see, our data present here, when we look at quarterly change, there are minimal changes of less than 1% only, so it's relatively stable. But if you compare the year-to-year change, the extent of movement is slightly higher with 4% or less. But if we compare a longer term trend since 2021, we are looking at a price adjustment of around 15% on average across all grades. Next slide, please. Beside the quantitative trends that we discussed earlier, we also like to look at some of the behavior or characteristics that we observe during this quarter as well. Within that, we see that the characteristic of the new project launches, especially within the past 2 quarters, for example, the launch of Times Square 6 and Times Square 306, mainly focusing on the affordability. Although these projects located inside centrally locations such as BKK1, which is a very prime location, but the pricing are still very affordable. We understand that the price range for these 2 projects are between $1,600 US dollar per square meter to 1,900 only. So this showing a real shift of developer focusing on the local domestic buyer basically, and focusing on the affordable end of the market. Continue to the next trend that we saw. We also starting to see returns of opportunistic investor, particularly looking for bulk purchase or multiple purchase at the same time. So if we compare this trend to last year, although we saw a price correction started early, 1 to 2 years back, but this particular searching or hunting activities has only started relatively recently, with investor looking at real bargain. But it was noting that these investors are not, buying just anything, but they are very stringent. They have certain requirements. They look at the stock very carefully, whether it's the primary stock from developer or secondary sales, making sure that this is price, good deal, good location, good rental return, or potential upside for capital gain, so on and so forth. So these are real experienced investor tapping into the bearish market right now, and trying to capitalize on the slowdown in the market. Moving on to another subsector inside residential, we'll be looking at service apartment. Inside a service apartment market, we haven't seen any new launches or completion in the 3rd quarter of 2023, making the supply relatively stable. It was noting that since the beginning of the year, we saw only 300 new units completion to the grade A and grade B service apartment. We haven't covered grade C and lower grade because of the vast in terms of supply. So within this presentation, we only focus on grade A and B only. Although supply seemingly slow in this year, we're still expecting to see several new completion within the next coming 1 to 2 years, especially coming from international operators such as Fraser, Accor, Ascot, and so on. So these are quite encouraging sign, seeing the maturation of service apartment market. Another slightly more encouraging signs in service apartment market is the increase in quoting rental on average. We are looking at an average of $19.6 per asking for grade A and $13.5 US dollar asking for grade B. Although these are minimal change of just plus 1 to 3% change quarterly, but if we compare across the market, especially to condominium rent and condominium sale, this is actually healthier compared to that aspects of the market. Next slide, please. On the other trends that we see inside service apartment, although relatively stable, we're expecting the rental market could be potentially more competitive, especially now that we see more supply of condominium units being completed since the beginning of the year, also in the upcoming few quarters. some of these condominium projects, the developer are offering the guarantee rental return scheme. Developer are also offering sometime, the service apartment operations as a package to cover for the GL as well. So these are type of units or supply that will come and compete directly and indirectly with service apartment. I said directly and indirectly because there are some competitive aspects to it. For example, the locations of some of these condominium are very prime, are very central. There are a lot of them have very good amenity as well. But when it comes to services, sometimes this service and quality of amenity may not match what service apartment, especially those in grade A, that can offer. So that's why I said this completed unit will become somehow directly and also indirectly competitive toward service apartment. Next slide, please. Another activities that we see continue in service apartment is the operations of daily stay. If you recall in our previous market updates, especially during COVID pandemic, a lot of owner or landlords of service apartment use daily stay as a bridging gap, as a bridging strategy for a vacancy gap. Because of the flying out of a lot of expat during the COVID time, to bridge this vacancy gap, developer are offering a daily stay, and even after the pandemic cool down, like we see with the current time, these operations still continue, understanding that the infrastructure, the structure of leasing already established. So a lot of owner or landlord of service apartment decided to continue with such structure. And it's also tapping into competition directly with hotel and the hotel market as well, although probably not as direct as what we see between service apartment and condominium market. Last but not least, I'd like to review or discuss another subsector inside landed property, which is inside residential, which is landed property market, also locally known as Burai. Within this quarter, we saw 3 new launch. Next slide, please. We saw 3 new launch and 7 completion. Presenting here in the slides some of the phases of new launches and completion within this quarter. We only selected 3 given the space of the slide, but this is also to give you an understanding of what kind of project that we're seeing coming up into the market. So a lot of these new launches and completion are mainly positioning within the high-end and mid-range segment. We see noticeably low activity from affordable segment, which can probably understand within the economic downturn like this, the income group that been impacted most is probably the affordable end of the market. This is probably why we haven't seen a lot of affordable launches within the past few quarters. Next slide, please. Within the new launches and completion that we presented earlier, compared to other segment of the residential market, which is condominium, we see relatively slow in terms of completion within Burai or landed property market. Unlike condo, where completion have to be in one go, regardless of the sales status, landed property has actually have got the advantage of slowing down their construction if the units are not sold, given the horizontal development nature of a landed property, as we can understand. So our observation is that because of the slowdown in sales, making the construction progress somehow slowing down as well. As you can see our presentations in this slide, only 70 plus project completed, within the 70 plus project expected in 2023, only around 50% have been completed so far, and we only have 1 more quarter or 3 months to go. This is why we expect that some of this completion will fall into 2024 completion. On the pricing aspects, we continue to see a price correction persist inside a landed property. Again, this is due to a slowdown of demand, but this is also expected following a number of years of very aggressive launch in the past few years, very similar to what we saw in condominium market, although condominium market is somehow early, around 1 to 2 years earlier than the landed property, and this trend only started in landed property, as we can see here. We also present prices changes across different type of units, namely link house, shop house, twin villa, and single villa. Definitions of these unit types can be found on our website if you're not familiar with these unit types in our market. Quarterly changes, as you can see present here, are also relatively small, within 0 to 2% only, quarter on quarter. But when we look at even just year on year, compared to 2022, there are some drastic change of average 13 to 14% changes across each sector as well. After talking about the quantitative trends, we'll also love to look at what happened in terms of activities and trends inside this market as well. So particularly in the past few months, we have seen more activity inside CBRE development, very similar to what my colleagues Daluch presented in the retail market. Developers are pushing for more community events and activity. This include yoga day, fun run day, weekend markets, farmer markets at the weekends, and a lot of community activity, including even festive celebration like recently Moon Festival. So these are what we've seen as an after-sale service from developer to keep their clients and residents happy, engaged, and improve their community sense of belonging and so on, but also as a marketing instrument for their remaining units and their future phases as well. And we understand that inside the residential market, word of mouth and direct referral are very important, and almost the most important or most effective sales channel for any developer. Another trend that we see, although has somehow presented earlier, that the liquidity issue surrounding the funding for both developer and individual owners still persists. We see more increase in non-performing loan for the individual buyers, but we also see slowing down in terms of construction, first due to the slowdown itself, but also due to the funding challenge for developer as well. So with this trend, liquidity and funding trends persist, we can expect that price inside landed property in both primary and secondary sales could continue to decrease in the following months. So this is probably a good chance for anyone with existing cash, I'm saying existing cash and not leverage, to purchase if they have the real demand for residential unit for own occupation. So this is the end of our presentation. Thank you very much for your attention. I'd like to hand over back to our Managing Director, Mr. Lawrence Lennon, to kickstart the panel discussion. Thank you.
Brilliant, and thank you so much, everybody who has been on the discussion so far today. I really appreciate your insights and presentations. It's extremely valuable to everybody in the market to get a different perspective in terms of what is happening. So I'll be joined by my colleagues, as mentioned, Kinkesa Kim, who's our Deputy Managing Director, Shivali, Chaman, who heads up our property management department, Daluch from our valuation team, and Sovanpech, who heads up our residential sales and leasing team. We have a few questions internally that we will ask, and then we will answer any questions that the audience has. So just to kick things off, I will ask a very broad question to all of the panelists before going further. So in your opinion, I'll start off with Daluch. In your opinion, what makes a successful project?
Thank you, Lawrence. I'll cover the commercial sectors, office and retail. As we have seen earlier, the competition still continues for both office and retail projects. In my opinion, the successful office buildings are those that are number one, located in good locations. As we have seen that central business districts buildings are still doing better than the non-central business districts buildings. Location is key, but other than location, it's the amenities that are available in the office building. Key number one criteria is the number of parkings, but increasingly more important is the other features like we've mentioned earlier, fire safety system, security system, and ESG features, especially for the international tenants. So if a developer is building a new or planning to build a new office buildings, needs to start to incorporate ESG features into the office buildings, because it's only going towards ESG and no coming back. So these are important in order to have a successful project. And of course, having a professional property management team to take care of the office building is very important to make sure that the tenants or the occupiers are having the best experience in the office building. For retail projects, it's the number one is location still, but number two, it's having the right tenant mix in their property, having the right design for consumers, shoppers to flow around, go in and explore their retail projects. And recent trends we have seen is incorporating community space and having other non-traditional types of retail tenants in their buildings, other than just F&B and fashion, but also entertainment types of retailers, and positioning their retail projects not just as a place to shop, but a place to gather. It's more of a community space now.
Brilliant. Thank you so much for that answer, Daluch. I'm going to pass the mic, as it were, over to my colleague Peck from the residential sales and leasing team. So question once again, what makes a successful project? I'm going to pass.
Thank you, Lawrence, for the questions. I think this is not much different from the commercial sector. We know that the market is challenged, the competition is there. So the most important things that developers should look at is, of course, the location, which is accessible, which is in a prime area, prime locations. And also the pricing is also important, as Kesa also mentioned that some developers of the new launches right now trying to position themselves from high-end to more mid-range or affordable projects. And alongside with this, the design is also important. I mean, the architectural design, the concepts that doesn't only serve at the pre-sale or the selling stage, but also about the post-selling, which give the landlords the opportunity to live in the residence where they have the livability, community-focused living, wellness, and also sustainability. And facility and amenity, of course, are very important, because you can see that a number of projects right now have offered a very good facility and amenity, and also some condo projects position themselves as service apartment as well. So they incorporate all of those elements into the project. So developers should really seriously consider on the facility and amenity that are unique in their own architectural design. And Project management is also another key area that developers should look at, because having the strong project management team will keep your client, will keep your landlord happy, and also increase a very good rate of tenancy as well. So yes, basically residential and commercial seems to have a lot of points in common, but these are the key things that I really suggest the developer to look at to ensure that their projects are more successful than the others. Thank you.
Thank you very much, Peg. I appreciate such a in-depth answer. I'm going to pass the microphone over to my colleague Shivali Chaman, who is the director of our property management department. So Shivali, what makes a successful project?
Okay, so as the real estate landscape is changing globally, and Cambodia and Phnom Penh are not really different, the complexity of the projects are increasing. There are different multiple components within the same project. So what we are now seeing is that property management has become very important, and it's imperative to have a good night's sleep for the developers and also for having comfort for the tenants. So property management is no longer seen as the revenue-eating caterpillar, but it's basically a protection of the revenue and the asset. So it is a must-have feature for the projects that, and especially for the landlords and for the developers who have grade A and grade B projects and who have institutional tenants in the buildings. So good property management definitely increases the attractiveness of the project, especially amongst the institutional tenants. At the same time, it also, all my colleagues are talking about ESG, health and safety. So yes, the property managers are constantly 24 hours working towards the safety, health and safety, and the wellness of the occupiers. So I think it's pretty much good property management that helps you to have smooth operations, happy tenants, happy customers, and retains the asset value over a longer period of time. Thank you.
Brilliant. And last question goes to Kinkesa Kim, our Deputy Managing Director. So in your opinion, what makes a successful project?
Thank you, Lawrence. Although I hate to be the last to answer because all the good points has already been covered. So I'm not going to repeat, but I just want to stress on the after-sale service. I think within the very competitive market as one that we are facing right now, distinguish yourself or your project from the rest of the competition is not only the marketing and after sale, but also before sale, but it's the after sale. So for residential project, this is after sales, after leasing. What are the activity or services that you provide to the residents and tenant? And then if it's in the commercial aspects, this is again with regard to the activity, for example, what we discussed during the presentations on the landlord, retail landlord activity to support footfall inside retail projects can really make a difference for retail, the business of the retail tenants and sustainability of their business inside those retail projects. Because with the very competitive market aspects, for example, we see around 10 projects launching and upcoming in around Hun San Boulevard. So this tenant can actually move around if the landlord are not taking care of their tenants well and not doing anything they can to improve the footfall within their mall. So tenant could have the likelihood to move around. So the after sales activity is very important. This is again tied back to the property management aspects that Shivali has covered. The tenant experience is very important, and without that, it's very difficult to make the future sales or to retain the current tenant that you have. Thank you.
Thank you very much, Kesa. Very in-depth answer once again. So I will just move on to one last question from the CBRE side, and then we'll open up the discussion to anybody in the audience. So next question, I will actually start off with Kesa this time, just to be fair. so she can get her 2 cents in. So where are the opportunities in the real estate investment space, and sector-wise, what is interesting, location-wise, what's interesting? Please let us know your thoughts.
Thank you, Lawrence. I'm pleasure to be the first to answer this time, but I think the question is very broad, and there are actually a lot of angles that we can look at this, whether it's from the sectoral or from locational aspects. I'll leave the focus on commercial and residential to Daluch and Pex to cover, but I really want to touch on the alternative investment aspects that we haven't included in our main presentation today, because this tend to be the overlooked investment options. What we mean by alternative investment are those outside the traditional investment sectors, such as retail, office, and residential that we discussed today, and can include anything from industrial, logistic to healthcare to school. These are much needed services and space for the development of developing countries such as Cambodia. But within the given the nature of long-term return of this sector tend to be overlooked and somehow discount by a lot of investors. And if you're looking at the opportunity that presents within the current market, within the oversupply challenge, especially inside retail and office project, a lot of this space can be used or repurposed, to use the technical term, to be some of this use that not only generating additional income from the use type itself, but also to enhance the experience of tenants or visitor or resident of these projects as well. So I actually think that a lot of opportunity inside this alternative investment that haven't been tapped into enough. I also look forward to hear from our colleagues, Daluch and Peck and Shivali, on other opportunity as well. Thank you.
Thanks for that answer, Kesa. I will pass it over to Shivali to answer the first question there. So once again, where do you see the opportunities in real estate investment, Shivali?
Thank you, Lawrence. So I know that Kesa's favorite subject is landed property. So we're seeing a lot more new landed property projects, and the only sector we saw even today during the presentation has got maximum launches is the landed property section. So I would say that this is the growth area, the estate management with more complex projects with multiple components. And estate management is basically going to cover the wellness, the health and safety, the ESG, the environmental norms. Landlords and developers are becoming more and more conscious about including these requirements into the projects. I believe that estate management, how it differs from property management, is estate management, in simple terms, in crude terms, is basically for the landed properties. So landed property could be a multifaceted property, including condominiums and offices, retail section, retail podium, as well as bores. So we are seeing those kind of projects coming up online, or it could be just a simple bore landed property project. So estate management, the basic estate management aspects that I would say that we're talking about here are most important are the governance that we would like to talk about from the risk management perspectives, from the risk mitigation perspectives, from the safety and the security perspective. So these are the important things that we want to talk about, and especially for the new time developers here in Cambodia, it is very important to understand the governance structure, the budgets, the human resources, the number of people you would require and need, and why would you need those people. So this is a new section, and this is a new sector, and more towards how to create a good community, how to create wellness within a safe environment. So this is something I would like to add on here, Lawrence. Thank you.
Thank you very much, Shivali. Again, great answers and great insights in terms of your specialities, as it were. So I'll pass it over to Pek and then Daluch for the same question. So where are the opportunities in real estate investment? Thank you very much, Pek.
Thank you, Lawrence. So talking about the investment opportunities for the kind of properties that Kesa and Shivali have already discussed, I totally agree with the landed property, but I also want to add on the condominium as well, because from generation to generations, there seems to be a lot of extended family and couple moving out from the families in order to find a residential place to live, which is near their workplace as well. So condominiums will be for sure still popular in the short futures, and with expats coming in to work in our country. So the investment is still, the opportunity is still there. But talking about landed properties, it's also important that you may look at the location that is near the city, I mean near the central business district, because the opportunity there is that the land price is still affordable, is still in a good positions. You still have the bargaining power right now. So having the investment in the area around CBD gonna be another important decisions opportunity for you to look at, and also try to position the projects in a way from affordable to mid-range, because in the situation right now, people that have the cash, the existing cash, they are still conservative in order about how to spend their money wisely in this kind of situations. So position the project with affordability in mind, and also a good balance with wellness and luxury living is the key here. Yeah, so it's together between affordability and also luxury. Yeah. Thank you.
Okay, so for the last but not least, for the office and retail sector, no doubt this is currently the tenants market. So a lot of opportunities for the tenants to lock in a new potentially lower rent, or maybe similar rents but at a newer building in terms of office space during this market. During the current market, maybe companies or occupiers can take this advantage and have a larger office space at ultimately the same rent, have a larger meeting room, maybe additional meeting rooms, a larger pantry, and that will feed positively into the staff retention program of each company. So this is a good opportunity for tenants to renegotiate or relocate to a better building. For retail developers, similar to what Melissa has mentioned, it's maybe repurposing some of their vacant space to alternative kinds of tenants, maybe those in education sector, having a kindergarten in their shopping mall, for example, or a language school, or a art or music school will help, number one, take up light space of the mall and make it increase the occupancy rate quickly, but also number two, those people that go to the new occupier will in turn support the other tenants in the retail project as well. So changing in the refilling strategy of those retail projects to target the larger retail occupiers.
Great. Thank you very much to all of the panelists for their input on our preset questions. Just to sort of move things on, I think there's a bit of an ongoing theme in the questions that we're seeing presented, and the first one that I will pick up on is where is China? Not an easy question to answer. So I think I will jump in and give some initial thoughts on that, and then pass that to some of my colleagues if they are brave enough to broach that subject. So for any China watchers in the audience, I don't think anything I'm about to say is particularly surprising. I think the important thing to understand is that the China of the pre-pandemic world is not necessarily the same as the China that we're seeing today in 2023. And that's for sure for the case of 2024. The world has changed, and we're looking at a very different global context to the pre-pandemic global environment. When we expect, or if we expect them to come back, is a whole other set of questions. And the reality is that we expect the Chinese to return in some shape or form, but it's not necessarily likely that they will return in the same format that they were present pre-pandemic. What we are expecting and what we are likely to see is that the Chinese that return are going to be more on the maybe manufacturing side of things. It's likely that they're going to be involved in other areas that relate to the government's hexagon broader economic plan. So agriculture, manufacturing, professional services. And that's really what we are hoping to see. And I think that's really what we're likely to see unfolding in the short to midterm. I will let any of my colleagues put their hand up and add to that if they like. I think my colleague Kinkesa Kim is enthusiastic to also add to this item, which we're all very passionate about. So Kinkesa, please give your thoughts.
Thank you, Lawrence. I just would like to echo what Lawrence said earlier about the return of Chinese investor in the next wave is probably less inside the direct real estate investment, but more probably toward the manufacturing. And I think agriculture and probably energy sector as well are what some of these institutional or individual Chinese investors are looking at. I think the audience is also aware that China also have facing a lot of challenges within their own real estate, especially within the residential development. I think this is another reason we did think that this kind of investor probably not returning, or developer are not going to return in such a big and obvious a trend such as what we saw during 2017, 2018, 19. But I think more sophisticated sector will be get a look at for those that we name a few like manufacturing, agriculture, energy, and probably tourism sector as well. Although we may still see several developer coming in and tap into the residential market as we already starting to see this year. Thank you.
Thank you, Kesa. And I will move on to the next question because I see quite an interesting question in the coming from the audience from Pitu Keo. Do you see opportunities spreading out of Phnom Penh in 2024? And will we see a return of building frenzy in Sihanoukville? I will ask Daluch that question first and then open it up to anybody else that is willing and excited to answer that question. So thank you, Daluch.
Beyond Phnom Penh, I think there are opportunities, especially in those provinces that are along the logistic routes to the whether it's to the international ports or to the international borders, mainly in terms of the industrial activities. However, in terms of building frenzies in Sihanoukville, I would say not anytime soon. The city itself will have to solve the existing issue of the construction delays and construction being postponed in the city first in order to move on from this phase. And we understand that the government, different parts of the government and private sectors are working together to work on this issue as well. But no doubt in the mid and long term, Sihanoukville is still the second largest city for the country, and it's still a strategic development location for the economy of the country, but not anytime soon that we see the same level of building activities in that area.
Okay, so next question. Serge, I'm not thanking you for this question. It's definitely a challenging one, but it's an interesting one. Specifically about the tourism market and when we should expect to see some return, and whether we're having some challenges PR-wise. So I think taking this challenging question head on, for sure we are having some PR challenges. The reality is that we are definitely not the first country on the planet to have some challenges in this space. Having good PR is important, and having a good message and a unified message is definitely important, both from a commercial perspective, but also from a hospitality perspective. So if we look around the region, there are definitely case studies that we can look at. It's more fun in the Philippines, as it were, is an amazing slogan, and the reality is that Khmer can do is just as good, if you ask me. So the reality is that I think with the right messaging and with the right opportunities, with the right partners, without doubt, we can move forward past these challenging times. Whether it's attracting further tourism from our neighbors, as mentioned earlier, we're seeing over 50% of tourists coming from Vietnam and Thailand. Both have pretty significant middle classes, and both are excited and open to having the same exciting things as Cambodians. So the Instagrammable moments, the new experiences. So the reality is, if we can find the right positioning, if we can find the right price point to connect with the 100 million people over to our east and the 70 odd million people to our west, not a bad starting point. And the reality is that everybody is looking for a great life experience, a great way of experiencing this wonderful place that is Cambodia. So I think if we get the messaging right, and if we get the right products in place, whether it's horse riding, quad biking, through the wonderful Siem Reap, just as an example, the reality is we are going to be moving in the right direction. Okay, so I think we've probably got time for one more question before we close up this session. Just looking through the questions where we have quite a few from the audience. Okay, so I'm going to ask the question. I'll let somebody volunteer for this one, but I'm going to ask it more broadly. So what do you think about the current development in Phoi Phet city? So I'm going to ask that in terms of, what do we think about the development in secondary cities in Cambodia? So it could be Phoi Phet, it could be Ba Viet, it could be Kampot. Please put your hand up if you're interested in answering that one, and in terms of what we think is interesting that's going on in the secondary cities. And I can see Kess is very excited about that one, so I'm going to pass that over to her. So please go for it, Kessa.
Thank you. I'd like to give it a try. Actually, I think this actually linking back to Daluch's answer earlier toward outside, opportunity outside Phnom Penh. When we look at a secondary city, those that Lawrence mentioned earlier, whether it's Phoi Phet, Ba Viet, probably Siem Reap, Mondulkiri, Sihanoukville, and maybe Kampot as well. All of these provinces have their own uniqueness and opportunity. So Daluch touched upon with regard to logistic aspects. So some of the provinces, such as Phoi Phet and Ba Viet, as a border city, they have a potential for these activities with regard to logistic and manufacturing, because it links back to the bigger population markets in Thailand and Vietnam. Also, they are more sophisticated value chain or a production chain within these two countries that have a positive spillover toward our border town as well. Some other cities, such as the coastal area in general, and then Mondulkiri and Siem Reap, there are very potential for the hospitality and tourism aspects. There's a question from our audience on the completions of new airport in Siem Reap as well. I think it will be significant support or assistance for the tourist arrival, as now we're starting to see tourism return. Although there have been a lot of talk on social media and general public that our recovery in tourism are not yet there compared to the neighboring country in Thailand and Vietnam. But actually, we compared to just last year, COVID-19, where COVID-19 was about to end, I think we have made significant improvement already. And looking into 24 and 25, tourism could be better, especially right now that we see more Western tourists return, although at the lower end, but I think more high-end tourists will also return. Some of the secondary cities around Phnom Penh are having positive spillover from the urbanization inside Phnom Penh as well, with regard to residential development and new establishment, but also especially toward the south of Phnom Penh in Kandal and Takeo, where the new airport is situated. We're starting to see some establishment and planning for logistic and industrial activity already. So these are all encouraging signs, although I think the market in general are still facing a consistent challenge with regard to supplies and demand mismatching. I think time will heal and will allow for demand to grow and catch up, absorb all of this remaining supply before we enter into the next cycle of the market. So thank you.
Brilliant. On that positive note, we will close off the Q3 2023 market insights. Thank you to the panelists, Kinkesa Kim, Daluch Chin, Shivali Chaman, and Sovanpech Som. Really appreciate your input, and thank you very much to the audience. On a final note, as I started off by saying, KYC, know your customers. If you're a developer that's online today, understand where the demand is coming from. This is absolutely critical. If you're an investor, this is the time. Absolutely that there are opportunities to be had now that wouldn't have existed for the past 10 years. That classic slogan, "Cash is king," definitely holds true. So without further ado, I will call this to an end and appreciate your attention for the past hour and a half. So thank you very much and have a good Q4 ahead. Goodbye.